You were listening to chartingwealth.com for Wednesday, the 15th of November, 2017. We see stocks decidedly down for the day, both the S&P 500 and the Qs, the NASDAQ 100. We see that conversely, TLT, the 20-year bond, and GLD gold are up. Let's jump right into the SPY, the Standard & Poor 500. This is the ETF that we follow that tracks that basket of 500 big volume stocks in the market. What do we see going on? A decidedly weak week. What do we see happening? Well, it's the first time since the last down week of the 25th of August that we've seen things start off down. Now, the week could change. It could change at this point, but right now, the first 2 days of this 5-day candle, we see a red spinning top. We see a little bit more movement on top as far as the wick goes, not quite as much on the bottom, but again, lots of indecision. And as we look at what's going on with the price percent oscillator, that's our main oscillator, headed down right now. Derivative oscillators also losing significant energy. Remember, as we look at and again, the weekly chart is still in a confirmed up move, but as we look at the 2-day chart, remember, it crossed over going down at the end of the last 2-day candle. We're just now in the first day of the latest 2-day candle as we record this at the end of the day on the 14th. Once the 15th completes, the 15th of February, then the candle that's currently being drawn will be drawn. Remember, a candle is not complete until its time period is over. If it's a 15-minute candle, the 15 minutes has to pass and the new candle starts to be drawn. That's when the old candle is a real candle that you can act on. Always remember that rule. So we see that the 2-day chart has rotated over decidedly. We see the derivative oscillator gaining energy, and we see the price percent oscillator rotating over strongly, passing through. The weekly trend line has already passed through in the last candle, ending on the 13th, Monday, the 13th of November. We had a penetration of the 2-day trend line. So the weekly now is being penetrated. Again, candle's not drawn until it's over. What do we see on the 4-hour chart? Well, remember we talked about that 4-hour crossover back in the morning on Thursday, the 9th of November. Things slid sideways for a while and then started cranking over decidedly in the morning on Tuesday, the 14th. Leveled out a little bit in the afternoon. 4-hour chart didn't close below the weekly trend line, however. The 2-day so far has, but that candle's not finished drawing yet, just a reminder. Okay, down 0.22% for the day. Looks like the SPY is losing some of its luster so far this week. The Qs, same thing. The NASDAQ 100, we see that the price percent oscillator has gone flat. Derivative oscillator still gaining energy. The green rectangles still actually moving up. What do we see as far as price movement, though? It's sideways and down. Actually, so far, the weekly chart is penetrating down its own trend line. Now, as we zoom in a little bit closer, but still positive, the 2-day chart has not crossed over going down like the S&P 500, but it does appear to be headed that way. And of course, the first day of the latest 2-day candle penetrated the 2-day trend line. Still a ways to go for it. It's the weekly trend line. And of course, it is right now a red spinning top with a lot more down movement on it. And again, just continue to keep an eye on things. Remember, things can turn around before there's any crossovers on the 2-day. And then, of course, the weekly, that typically the 2-day happens first. It's a smaller wave, then the bigger wave. But if indeed the 4-hour chart moves over going up and has enough power, it could give us a jumping in point. It hasn't, though. It continues to actually power down. 4-hour chart gained even more down energy and penetrated the 2-day trend line in the morning on Tuesday, the 14th, and stayed below in the afternoon. So just keep your eye on things. If this is just a leveling out and a sideways slide and things rotate back around, then of course we would look for a potential jumping in point. We will keep you posted. I sure hope you are filling out your daily market worksheets. Very, very important. It's the way you supercharge your training. You want to know more about those worksheets? Of course, we've got great training at the website and, of course, at our YouTube channel. Please subscribe to the Daily Market Review. With that comes the PDFs for the Daily Market Worksheet, Weekly Market Worksheet, and the Trade Worksheet, along with a link to our How to Read a Stock Chart video and the layout that we use at freestockcharts.com. Let's keep moving along, friends. What do we see going on TLT, the 20-year bond? Up 0.68%. Now, as we look at things, we know that the 20-year bond is currently on the weekly chart in a confirmed down move. Although it is pretty much flat, the price percent oscillator may be heading up a little bit. Derivative oscillator losing downward momentum. Also, two-day charts already in a two-day vertical crossover. Looks like that occurred back on Friday the 3rd. As we take a look at that, yes, indeed, that's when the two-day vertical crossover occurred. But that has since fallen off. And again, an up day over the course of the day on Tuesday. Candles not drawn yet. We'll continue to watch because of the schizophrenia with the weekly being in a down move and the two-day being in an up move. We do not have a trade on the TLT, the 20-year bond. We're just waiting to see how things settle out. Remember, we are not forecasters. We are trend followers. The two-day and the weekly must be moving in the same direction. We typically like to have a pullback on the 4-hour. That means moving in the opposite direction of the two-day and the weekly, and then once it crosses back over, we call that a backup when it moves in the opposite direction of the weekly and the two-day. Once that backup finishes and it moves back in the direction of the weekly and the two-day, whether that's up or down, that's your jumping in point, unless we have the magic of a weekly vertical crossover. And a weekly vertical crossover, when that occurs, or we've seen most recently in the S&P 500 and the NASDAQ 100, that always happens on a Friday when the 5-day candle or the weekly candle finishes drawing. Then we look to get in at 10:30 that following Monday morning. And folks, it works like magic time and time and time again. Not always, but a large majority of the time. And when it doesn't work, we'll pull the plug, minimize the loss, and wait for a good signal to jump in. So again, we're trend followers. This is not rocket science. This does take practice. If you don't do your daily market worksheets and your weekly market worksheets every day, you're not going to figure this out. Well, your daily market worksheets every day and the weekly market worksheet once a week in the trade worksheet when you do practice trades. So please, we ask you to do that because it's the only way you're really going to learn. What do we see with TLT on the 4-hour chart? Of course, throughout the course of the day, on Tuesday, up in the morning and the afternoon. Again, no trade right now because of the schizophrenia in the two-day and the weekly going in opposite directions. So we'll just continue to watch, see how things settle out, and then trend follow when the trend following's good. Okay, back to our last chart, gold. What do we see going on there? Gold is trying to bottom out somewhere around 120.50, 121. As far as looking at the weekly chart, it's continuing to lose downward momentum on the derivative oscillator, not going down nearly as fast as it had been on the price percent oscillator, but still headed down on that. But we see a sideways slide over the last 2 weeks. Well, actually bottomed out at about the same place over the last 4 weeks. We can even track all the way back and see where it bottomed out all the way back on the 6th of October at about the same area. So again, seeing what we see, we have the weekly in a confirmed down move. What's going on with our two-day? It's still in a confirmed down move also, but trying to cross over going up. So again, if that occurs, that will mean that we have a bit of schizophrenia as we have on TLT. It's nice, though, to see gold and the bonds over the course of this day, Tuesday, moving in opposite directions of the market, which is typically what you expect of gold and bonds. Why? They typically are safe havens when the market's not doing well. Gold and bonds are where money tends to flow, or in the past it's been that way. And the opposite is true. When gold and bonds are not doing well, money tends to move into the market. What do we see going on the two-day chart? Again, we see this sideways slide over the last 3 candles, really 2.5. So again, that represents 5 days. May have a crossover going up. And then lastly, our prescient 4-hour chart, what's it telling us? Well, getting a little goofy. Again, with this sideways slide, remember how we talk about the price percent oscillator, very similar to the MACD. We have a great training at the website and our YouTube channel on the price percent oscillator, the master indicator as we call it. It doesn't work very well when you have a sideways slide. So we see this bit of noise happening. An oscillator gets noisy when things aren't moving. To oscillate, to have an oscillator work well, we need price movement. And what we've had is sort of a sideways slide. It did try to cross over going down shortly at the end of the day on Monday, and then down some at the beginning of the day on Tuesday, but then moved over back up. Keep an eye on what's going on with gold as the market opens in the morning on Wednesday to try to get a feel on that 4-hour chart where things are actually going. Remember, things are poised. Again, potentially, all things being equal, the market tends to move in the direction of the largest chart, which is the weekly. We shall see, but that 4-hour chart on gold is so prescient. Just watch and see if you see any strong movement one way or the other on this 4-hour chart. Might give you some indicators of whether you want to go short or long on gold. And if it's confusing, you don't do anything. First rule, don't lose money. Second rule, make money. And of course, we're talking about virtual money. We're not a stock calling service. We're an education firm. We want to help you figure this out. And then when you get good at it and you can do trade after trade after trade accurately, then and only then can you decide what to do and when with your own money. That's where we are, folks, as we end the day on Tuesday and go into Wednesday, the 15th of November. God bless. We love to hear from you. Oh, and guess what? I forgot to attach the Chapter 5 link. It has been recorded. It is currently loaded up, and I will attach it to the email going out to all of our members today. You will see it. And again, if you're not a member, you need to become one. How do you do that? Well, you go to chartingwealth.com, put in your name and your email address, and you will be receiving our daily market reviews. God bless. All the best from the entire team here at Charting Wealth World Headquarters.